gap exists. More than $5 trillion in the MSME segment and more than $3 trillion in the rural segment. At the same time, we have most of the developed world where yields are quite low. Even in the current environment, after all these raises, the yield is less, around 2%, less than 2% on the short-term deposits. And as we know, a few months back in Europe, the yields used to be negative, even in certain cases. So there is this disjoint reality where there is credit gap, and as a result, in the emerging markets, yield and the demand for credit both are high. On the other hand, in it is the right amount of risk. And that's where decentralized finance came and promised a huge yield on many things. Unfortunately, as we have seen in last 1 or 2 months, that those were not standing on solid economic background. And that's where we are facing certain problem as well. So the core idea is that how do you bring economic value to the decentralized finance? And that we see it is only possible by connecting decentralized finance to the real world. And this is where we see that that DeFi can be a vehicle to bridge that credit gap and at the same time bring real world yield, and that to higher yield to the population who has got the wealth over there. For this purpose, we are offering a decentralized lending protocol where anybody can be a lender from across the globe, and anybody across the globe who holds assets of any type. Assets can be commodities like rice, wheat, etc. Asset can be gold, asset can be real estate, receivables, revenue, expected revenue, etc. All of those can be borrowers. Anybody across the globe can be a lender. These are being offered in terms of real world asset backed bonds. So we are bringing bond market to the decentralized finance with a fixed interest instrument, so that some of the problems which we have seen in the decentralized finance world recently, which has created certain turmoil in the crypto world, we are addressing all of those, whether those were variable interest payments, whether they were backed by crypto assets which were volatile themselves. So we are solving for all of that, as well as our focus is using this crypto capital to direct it towards low cost crypto loans in the emerging markets, lower than the existing rates, but is still higher than what people in the Western world where wealth is concentrated at. How do we do that? So before I go into decentralized finance, I would like to talk about what we have done in the blockchain space in India. As I mentioned, we are the only blockchain fintech startup of India, which is running an independent platform as a fintech on blockchain rails 100%. Today in India, we have got 1,400 asset custodian warehouses where commodities like rice, wheat, soybean, corn, etc. can be deposited by farmers, and against which banks are lending directly on the blockchain platform by way of smart contract lending against non-fungible tokens created against real world assets. This we have created wherein the borrowers like farmers can go to a warehouse, deposit their commodity there. The data is audited by third parties for both quality and quantity. Price is taken from different price data feeds like NCDX. All of this data is put together and a non-fungible token representing the deposit in the warehouse is created. This non-fungible token is logged into a smart contract so that a bank can lend against this non-fungible token. And when they are logged in the smart contract, no delivery of the goods can take place unless and until goods have the loan against the goods have been repaid. So this we have built, and in this what we did build. So we brought this product in 2020 to the market in the centralized finance space. And since then we have tokenized more than $600 million of commodities deposited in these warehouses. In last 12 months, in last 14 months, we have actually given more than 50 crore rupee, more than $6 million of loan to the farmers out of the farmers deposit. So out of 4,600 crore, farmers deposit around 250 crore. And out of that, 50 crore rupee have gone for the loans. This has been done over a decentralized network of 1,400 warehouses in 5 states of India. And we have, from the purpose of tokenization, we have tokenized assets belonging to 18,000 customers so far. Now the same model, we are taking it to the decentralized finance. So where we had banks as a lender in our India story, as here on the right hand side, the same part we are replacing with a decentralized finance protocol, which will allow people from across the globe to be a lender instead of only being lenders of a specific country. So the borrowers also can be from different countries and the lenders can also be from the different countries. However, the tech solution of tokenization, tech solution, the physical world work of getting the warehouses, etc., on board will be done by Brew Finance in the process. And this decentralized finance lending will be backed by bonds, as I have mentioned, and will also bring real world asset NFTs, a novel combination for the first time in the decentralized world space. The market size is quite humongous. As I mentioned already, $8 trillion of credit gap exists. Plus, Swift has predicted that by 2025, more than $24 trillion of real world asset will be tokenized in just next 3 years. And this comes not from a crypto background, but from the Swift, which is the international platform for settlement of payments. In terms of our traction, we have already achieved significant traction in Indian market on the centralized finance part through tokenization and agri-commodity financing to farmers. In terms of DeFi space, we just went live on the testnet of Polygon network. We are looking forward to go to the mainnet network where the product will really become live in the next quarter. And also we recently signed two MOUs in Philippines and Singapore to further take this solution to the Southeast Asian market. In future, right now we are working only in agri-commodity financing space, which is also known as warehouse receipt finance. But in future, we will be looking to take this solution to other commodities, for example, gold, as well as other asset classes like receivables, etc. The core objective is that the entire platform itself can be used for the purpose of tokenization of any asset, and anybody across the globe can lend to people against those assets. So 100% secured loans, rather 140% secured loans, as only 70% of the value is given as loan. And for this purpose, we are raising fundraising of $1.5 million at this moment through a private token sales, out of which around 25% has already been received from VC funds like a Japanese VC fund, as well as angels like Sandeep Nalwal, founder of Polygon, etc. And we are in the process of raising it further. We are also receiving certain more commitments in the process as well. This token is a governance token, which gives a right to vote on each and every transaction proposed by being undertaken by the protocol. But in addition to that, it also gives the token holders the right to the cash flows generated on the platform. Also, because we have both real and crypto world integration, we believe that over a period of time, real world use cases of the crypto token will also start taking place. In terms of customer acquisition, we already have a 1400 warehouse network. And so our B2B2C is how we acquire the customer. Warehouses act as our foot on the field. And that way we keep our cost of customer acquisition also low. In future, as we venture into other asset classes, we will partner with other partners who will be similar to warehouse and create an embedded finance network of asset-backed lending. But at the same time, we need to acquire the capital as well, because here there are no banks. We have to acquire capital in the same fashion customers are acquired in any Web2 business. So for those purposes, we have created protocol-owned liquidity and APY mechanism, which will actually come into effect in the next quarter. The core idea is that how do we give more yield, and also yield will be given both economic yield, which comes from the borrowers, and for initial days, yield will also be given in form of further token incentives, thereby creating an incentive for people to join the project and become a part of the lending pool. A spread between the two, lending and borrowing, is actually similar to like a banking platform. platform will work is our net interest margin is our core revenue driver over here. And we perceive that because of huge credit demand and still low cost of capital, we will be having a better margin than typically is available in such sort of DeFi play, which has been there with in DeFi in crypto space. We will be earning more than that by DeFi in the real world as state. About the team, as of today, we are 27 people strong team in both tech as well as sales and marketing, etc. We are three co-founders, myself and Falguni and Abhishek. I come from finance background. As a chartered accountant, I spent quite a lot of time in the debt syndication and commodity market space. I have been into blockchain space for last 6 years, 6+ years. Falguni largely comes with legacy system background in the IT industry like Capgemini, 3i, iGate, etc. And Abhishek, who is also here today, so he was part of 3 startups in the blockchain space before he last worked in Policy Bazaar, and has been part of our journey since the very beginning. We are supported by a strong team of advisors. So Philip Sumakar, who created App Store for iPhone with Steve Jobs, and currently heads one of the strong companies in the blockchain space, is our tech advisor. In addition to that, Nishtha and Rama Iyer, both of them were part of the Nucleus Vision team that raised India's largest ICO of $42 million. So Nishtha was CEO and Rama Iyer was the CEO of Nucleus Vision. So both of them are part of our advisory team, and Karan Vaswani is advisor to many legal projects in the crypto space, who is a Mumbai High Court lawyer, but now based in Dubai for advising 100% in crypto. So this is our this is what we have support from the different advisors. We are currently in the centralized finance space. We are working with the governments. We are working with banks. We are working with Nbfc as source of capital. And we are also working with private warehouses who are custodians on our network. We have been supported. The journey has been supported for last 2 years by several institutions of repute like IIM Ahmedabad, Pusa Krisi, Cisco, UNDP, etc. Qatar FinTech Hub and Dubai DIFC, both we have just entered recently. And this journey has been well recognized as well by large institutions by way who have given us recognition by way of giving us certain awards. So this is all we from our side in terms of, as I mentioned, token sale of pre-seed round we are doing right now of 1.5 million, which will be largely used for tech development and sales and marketing, which will cover both customer acquisition as well as the lender acquisition. In addition, there will be some expense on the international expansion, which is our next target. And because DeFi is always going to be a global play, it is important for us to be positioning ourselves as wider on the global network as possible, as early as possible. So this is all from my side. And thanks a lot for the patient hearing. I will be glad to answer any questions. I'm sure there will be quite a few. So thanks once again.
Ajay has a few questions. I think it's in the chat box probably. Yeah.
It's not credit.
Okay, all right. Let me speak the questions out. So 2 or 3 questions. One is on credit gap that you talked about, which will create the demand. I don't understand how. 2 questions. One is the credit gap is, largely a risk reward ratio, right? That's, how much credit they want to give to what kind of companies in India becomes an issue. So that is one. The second is, if for a moment I assume that this credit gap is due to accessibility, which means people outside India may want to give loans, but they don't know. How is your platform making that visible and attracting them? I think that's first question. Maybe we should start with that.
Sure. So I agree with you that the credit gap exists because of risk reward. But at the same time, credit gap also exists because of restrictions on the capital flow. So for example, if the capital flow would have been much more liberal, India would have attracted much more capital as well. But today, for an individual, it is impossible to raise money from external commercial borrowings. And for small enterprises, it is, I won't say impossible, but it is very difficult to raise money through external commercial borrowings, because there are so many restrictions which are over there in terms of capital flow. So while agree with you that the risk and return is a factor, but capital flow is also one of the major factors, which you mentioned that it is about lack of awareness. More than awareness, I would say that it is control on how the money will move becomes a factor. And I would like to give the example of the growth of NBFC sector in India. So growth of NBFC sector proves that there was such a huge demand of capital, which the banks were not actually fulfilling, given whatever was their capital size, balance sheet size, and so on. India doesn't have very large balance sheet banks. So that's why NBFCs came up. And that's where we see that when NBFCs microfinance came up, tried to bridge that credit gap, there is still possibility to bring private capital also to the same space, not only in India, but in other emerging markets as well, where certainly risk will be higher than what they are used to in the developed economies. But the risk frontier, if we deploy a CAPM of the credit in these markets where we are working, we are not going for unsecured loans. We are not going for any other sort of financing. We are going for 140% asset-backed loans. So there we are seeing that the risk is still lower and the return will still be higher given the credit demand. For example, today in India, agri credit is going for 9% to 18%, even in the secured fashion. Same goes with the gold loans which are 100% secured, or rather more than 100%. Again, the gold loan credit, we have seen that even small Nidhi companies are charging 20% rate of interest and making it available and people are borrowing. So we see that the access is one of the factors as well, other than risk and returns.
So if that is the case, like if the government control, if you say so, is the issue, then how is this platform solving? And if it does, then does it bypass any regulatory restrictions?
No, it doesn't bypass a regulatory restriction. The regulations don't exist. So as of today, crypto is a non-regulated sector, as the government has already explained in the Lok Sabha, and that gives us an opportunity to use this non-existence of regulations to leverage the crypto platform to move capital without restrictions. As of today, that is possible, and that is how markets have evolved in India. Nbfc also started without banking license. The regulations were not there. Microfinance also started by NGOs, started giving loan, and slowly they became regulated entities. So we see that the same path. Right now, there is no regulation. Once the regulations will be in place, we will be in a position to leverage that once again, like NBFC's microfinance P2P lending have done.
So I think Sanjeev's question is answered. What are the current regulations governing your business? So you say there are no regulations at this point of time.
Yes, right. That's what the government has given in a written reply in Lok Sabha, that there is no per se, there is no regulation governing this crypto sector as of today.
No, but is it really a crypto sector? Because you actually the value or whatever, the value chain includes the actual asset, which is, let's say, the crop, right? So there is a value of the crop against which you create NFT, and NFT basically is, I'm assuming, the value on that particular day of the crop, right? Against that asset, you bring in real funds from outside, and those guys, I don't know, what do they own? They own a NFT then, which is backed by this asset.
Yes, they have a charge on that NFT. They don't own it. The ownership still remains with the borrowers. But in case there is a default, they will have the charge on the asset, and that charge part will be taken, that collection part will be taken care of by us.
Correct.
So in case of delinquency, you are responsible for liquidating that asset and paying back the lender.
Paying back. Yes.
And how much money would you make?
So as I mentioned that our revenue will be whatever the interest rate in the market. So if we lend, say for example, between 11 to 18%, that is what we will make of the loan amount.
So tell me, how is this script? For example, let's say I'm sitting in USA and I'm sort of, or USA or some country, and I'm sort of lending or buying an NFT, which is a farmer from, let's say, Purulia or some other place, right? Now, how is that cash flowing to the farmer, in the sense that NFT is now coming into your platform, which means that cryptocurrency is owned by your platform at this point of time. So from this to the Indian rupee conversion to give to the local farmer, how are you doing that, in the sense, and how fast is that whole operation?
Sure. So by the way, that has yet to start, the conversion part. Right now we are doing in India with the banks, where the cash flow happens through bank account to bank account. And in several cases, we have that entire process has taken place within a few minutes as well. Otherwise, typically it happens within 3 to 4 hours of the commodity coming to the warehouse. That even with the banks, the lending process is complete. So actually,
no, just 1 second. So the banks are lending,
Yeah.
in Indian rupee against
Yeah.
a charge, which is a digital asset.
Which is a non-fungible token again there.
Okay. So does RBI allow that type of a funding, in the sense, is it secured funding or priority sector lending, or is it unsecured?
So it is 100% secured. See, NFT is only a logical representation of what is really in the warehouse.
Right.
Actually, that is my question. If that is the logic that you take, then crypto that you are using, or NFT, is basically an asset class, right? Which has a backing of wheat, and wheat as a backing of the real market price. Now I have, there are 2-3 questions. If the price of the wheat goes up and down, who loses or makes money? Is it you or is it the lender?
No, there is the margin involved in that. So that margin covers everything. The up and down is covered by the margin. So if you are giving 100 rupee of wheat today, probably they will lend only 60 or 70 rupees.
Yeah, 70 rupees.
Okay. So the risk lies with the owner of the asset, which is basically the farmer.
Asset price fluctuation risk lies with the owner.
Okay.
But there is a risk for the lender also. What if the margin goes down? So
Correct.
that risk remains. However, that is where the assets which we have chosen are not volatile assets like Bitcoin, etc. See, currently DeFi is a big market of $100 billion. In 2 years, it has been created. But that entire part is lending against digital assets like Bitcoin, etc. So it has its problem because they are quite volatile. So that is where we are bringing, instead of digital assets, we are bringing real world assets. So we are improvising the DeFi part by bringing stable collaterals over there. Because these are commodities which don't fluctuate like 20%, 30%, 40% in time. They have fluctuation, but they are quite controlled fluctuations.
So there is a question from Sanjeev. Companies like Cred with deep pockets are also likely to join this sector.
Most probably, how we will see that they, given that they are so deeply entrenched into the Web2 and the regulated space, they would rely upon partners like us to actually help them with crypto liquidity. So if they, 2 to 3 companies are already doing this sort of a business, that they take money from crypto and give it to the fintechs for the further lending. Brew has developed the entire protocol, entire backend, so we are not doing that. But that is what we believe, that if trade comes into the market, they will not directly create this sort of a platform, integrated platform, the way we have created.
Okay. So now, Ashish, can you just take us through how we invest? For example, if we make a commitment now in this $1.5 million, what is the process? You are saying it's against tokens, right? So how do we pay Indian rupee and get shares in the company, which is what we are used to typically, right? Now we are going to get something else.
Yes. So at this moment, similar to SAFE agreement, like SAFE has been used by a number of investors to invest. So similar to SAFE, and SAFT is signed. And once the tokens are launched into the market, so we will be launching our token into the market within next 12 months. So, so when the tokens are launched, at that time, tokens will be given to the investors. And those tokens will have a vesting schedule. So with a 3-month cliff and 2-year period. Now that is what we have entered into agreement with other investors. But leaving that aside, so at this moment, SAFT will be signed, and the only part is that Indian rupee, if we try to accept Indian rupee, there may be certain regulatory challenges for us, because even the entity, Brew Finance entity, is an offshore entity. But what we will do that whatever is the amount, we will facilitate a conversion of that into crypto. Crypto means USDT, not Bitcoin. USDT, which is pegged to USD and has a stable value. So through the exchanges, we will get that converted. The protocol will receive USDT. The protocol will hand over a SAFT right now and a token in the due course.
Okay.
So the part about conversion, I would suggest that Hari, don't worry over that. Today also, because we are going to do this on a daily basis for the people who will be the borrowers. So today also we had I and Abhishek had a meeting with one large crypto exchange for developing APIs on partnership. So we will be able to take care of the conversion part.
So Sanjeev asked a question. Sorry, guys, I have no idea how token ownership is different stroke advantageous than owning shares of the company.
Okay. So it can be advantageous in one way from an angels. If I look at from angel investors perspective, tokens are much more liquid. Also, the exit years are much faster. So typically, if we assume that the exit in the Web 2 or Web 1 world happens in 5 to 7 or sometimes 10 years, the exit happens within some time, at the max 2 years, that everything gets vested. And also the probability of exit is much higher, because while IPO doesn't happen for most of the companies, and M&A also is not very high. In crypto, most of the tokens actually when I say most, means almost 80-90% tokens get listed. So when they get listed, automatically again an exit opportunity. So the percentage of exit opportunity is also very higher for the angel investors over here than typically in the equity rounds. So that is what I am suggesting. Otherwise, the way we have constructed our token, where there is a voting right, where there is a cash flow right, so there is not much difference in terms of structure. There is another difference which I would just like to point out, that if you look at this tokenomics graph of Brew Finance, you will see that there are so many type of token holders. Typically in equity, only the investors and the founders are token holders. But here, other than founding team and other than these investors, pre-seed, seed, etc., which are total 18%, IDO is the public market. So total 18% plus 15%, 33%. Everybody, and if we took the developer pool as a ESOP, so 5% of that, so 60% tokens are not held by founders or the investors. They're held by different participants, because here we use token to bootstrap the operation itself. So tokens can be used as payout for the CAC. Tokens can be used as payout for getting more and more people to support the network security as well. For example, every time we transact on Ethereum network, we have to pay a gas fee which is essentially charges in other words. We have to pay that charges in Ethereum token itself. So every time we are doing something, we have to pay. It means all of us have to have the Ethereum token, even if they are not founder token or the investor token. Though that's a bit different than typical equity structure.
So Ashish, can you explain marketing and operation 15% tokens? So how will this operate? You would hire marketing people, or you would spend with, spend on other efforts. So how is the value of token, going to be used to basically pay off something?
Okay, so it means then when we spend on marketing, we will pay, instead of paying in cash, we will pay in tokens. It is like you are paying in equity.
That I've understood, but that means your token actually has a value in the market.
Yes, that is so the core idea of creating a token is capture the value in the ecosystem in that token, because the value accrual will happen through the business growth and through the revenue growth. So how do we, so it means that if tokens represent that value accrual, it means that every token has a particular value. For example, today, if we say that the Bitcoins represent, say, $600 billion worth of value. So every Bitcoin is 600 billion divided by, say, 20 million, 19 million of Bitcoins. So that's the core idea, that the tokens capture the value of the ecosystem in which they are operating. And when they are operating in that ecosystem, then every token can be also used as a method of payment. As I gave the example of Ethereum token, every time we do a transaction on Ethereum network, and it is today the largest network, we have to buy. I mean, if I don't have in my pocket, I will have to buy from somewhere an Ethereum to spend that, to even do a transaction. So if I'm doing a transaction on Ethereum protocol, I will have to buy Ethereum from somewhere and pay to the network for that.
Okay, so Ashish, I have understood. My doubt is coming. That means for you to run your company, you need predictability, right? I mean, when you, let's say, allocate $100 towards marketing, that $100 is in your pocket. But if I understand this right, and correct me if my understanding is wrong, if you allocate 15% today, it might be $100 today, but tomorrow it can be 120 or it could be 80. Then how will this work in the market?
So this projection is for next around 4 years. So how we do that? So we understand. I mean, almost as you also understand that, as you rightly said, that it has to be predictable. So idea is that how many years it can take? It can take 2 to 4 years to become a predictable business where everything has settled. It means if we have reached that scale, so this 15% is from that perspective, that total, how many tokens will be minted? 250 million. So out of those 250 million, 50 million tokens, 37.5 million tokens will be reserved for marketing and operations. These are not handed over, these are reserves. So supposingly we don't need that, we will not spend that. That token will be with us, we can burn that token. Just like shares are bought back, we can do that. So it is a reserve which has been kept. And over a period of time, from this reserve, X number of issuance will take place. That X number of issuance will be linked to the business operation. In our case, it is linked to the loan book growth. So we have kept it in our token economics that as the loan book grows, so our token issuance will also grow according to that. So that is where we will be keeping that marketing and operations. Essential idea is that people can be paid in tokens, and if they have tokens, they actually get better returns. For example, a token holder will get interest discount than a person who doesn't have any token. And that interest discount, which every Web2 company also does by form of cashback, that's the same here, that instead of giving USD or INR, we are giving our tokens to people. It's an acceptable practice today also in our Do Finance team. Our digital marketing team is paid around 67% salary in INR or USD, and 33% of salary is paid in the form of tokens.
Ashish, I think thank you very much for your presentation. We have one more to go. There is one last question which Sanjeev has asked. Is it okay for founding teams to own very less percentage of tokens?
So this is after 5 years. Actually, this 15% doesn't happen today. This is a what we call fully diluted chart. The full dilution will take place after 4 to 5 years, not today. So it is just like if you are going to IPO after 5 years, founders today also hold, typically single digit shares.
Thank you, Ashish. If there are any other calls, we will take it subsequently. So we will bring Ashish to our main, network also. So Ashish, thank you very much. It was very interesting. I think the future is definitely in DeFi, and we will definitely see how we can participate. Sure. Thank you very much.
Thanks,
Abhishek, you want to say anything?
No, sir. Thank you. Thank you so much. I think you have another presentation to go. Thanks so much. Thank you so much for listening.
Thank you. Thank you.
Thank you.
So our next presentation is by Oyon. Oyon, they also run an agri company and use blockchain. So interesting work they are also doing. So Oyon, over to you. Please do your presentation.
Yes, sir. So can I share my screen? I don't have access.
Sure.
Yeah, thanks. One second. Are you able to see my screen?
Yes.
Thanks. Yeah, thank you so much for your time. I'm Ayan, co-founder and CEO of Borlough Web Services. I'll just quickly go through the slides. I'll wrap up the slides and I would look forward to the interaction more. So Borlough Web Services, it's a SaaS platform for responsible sourcing where we are looking at 3 pillars of any sourcing supply chain. One is the physical supply chain traceability, the sustainability assurance or the transparency and the compliance of this supply chain, and finally the financial transparency, which makes a trade assured. So these are the 3 pillars. Coming to the problem, most of the global supply chains are multi-tiered and they have multiple stakeholders, and the lowest visibility lies primarily in the early tiers. It's not the first tier, the second tier, where they have pretty good visibility. So this lower visibility is leading to, for both the producers and the traders, various risks such as quality and compliance risks. On the procurement side, a lot of frauds happen on the procurement side because of the weak governance and the internal controls. And finally, one of the very key things that we discuss across the world today is environmental and social negligence, which is a key topic for brands who have to comply to various mandates, which are now becoming as acts across the world, like supply chain due diligence, Supply Chain Transparency Act in US. Europe is going for multiple mandates. So these are key things that are now demanding more visibility into supply chains. And if you look at the market, about $2 trillion of ESG assets, if I just talk about agri-CPG, so we focus on the agri-CPG industry, and about $2 trillion of assets are going to be tracked by 2025. And if I look at the tech play there, and the opportunity for tech companies, it's around 1.5%, which is a $30 billion visibility, compliance, and a financial transparency market. And if I look at the S2P, there are three primary pillars of S2P is supplier management, where we can provide verified compliance, source to contract, where we increase the efficiency and visibility via track and trace and transparency. And finally, on the procure to pay is where blockchain, like a decentralized system, could bring in smart contracts and tokenization to have accelerated settlements. So with that, if you look at the market opportunity today, as I said, it's about $30 billion of tech play. And the blockchain intervention in these supply chain efficiency tools and transparency and traceability tools is growing at almost 48% CAGR. Now coming to the solution, like I mentioned before, that most of the global supply chains are multi-tiered. They have lower visibility, and interoperability is probably the key issue in having, if you need visibility, you have to talk to different systems going as you go down the tiers. So that's the first thing we solve with a decentralized platform. So the Borlough network is a purpose-built blockchain, again, built by us, ground up, on top of which we have a API layer, which we call Borlough Web Services, hence the name Borlough Web Services, which can integrate to multiple blockchains because there are diverse systems in multi-tiered systems, diverse systems like ERPs, procurement solutions, or even blockchains. So we have built bridges. We are already talking to all the Polkadot chains because we are a parachain and a parathread on Polkadot. So all about 150 projects running in Polkadot are all interoperable. And we've also built a bridge to any Ethereum chain. So that's the primary thing that we solve, that is interoperability. And then coming to the three pillars, like I mentioned, like track and trace of value chains. So any value chain, any sourcing value chain, the physical supply chain traceability is what we do through the first module, which is called Borlough Clarity. Then comes the sustainability assurance and the audit piece, various certifications, and the sustainability assurance is solved by the Borlough Trails. That's the second module. And finally, the financial transparency is where the digital assets and contracts are tokenized on the chain, which provides a single state of truth for all the stakeholders in the chain. And because it's API driven, we can integrate with multiple systems. And this is the source to pay life cycle. In that, like I mentioned, the supplier management or all the onboarding of all the suppliers are done on the Borlough Clarity module. Borlough Trails is where we do the source to contract and procure to invoice, where you have to do the traceability, the physical supply chain traceability, as well as any certifications that go along with it, like Global Gap, RSPO, RFA, any kind of these certifications. And finally, the financial transparency is where the CX layer brings in these tokenization of various documents that are generated in the supply chain, which is primarily taking care of the reverse supply chain. That is, the money flows in the reverse order. But all this are done on a zero-code blockchain SaaS platform, so which lowers our time to value. Accountability is brought in through, because these are all dApps. So you are actually signing information into whenever somebody is entering information in the chain, and interoperability through our, which is our core promise. I'll just go to a customer success story, where we are working with UNDP, and later on we're now working for this brand Masha Coffee. They have onboarded about 1,000 suppliers, which are farming collectives as well as large farmers with unique digital IDs on the platform. We are doing the assessment that is through the first module, which is the supplier onboarding module, and monitoring them through their geotagged, and they're monitoring on various socioeconomic and agronomic parameters. That is prior to the harvest. And then there is also Rainforest Alliance assessments and compliance happening on BWS, that is through the Trails module. And the track and trace is also happening right from harvest till it is packaged as a brand. Now, all this is giving them higher visibility as a brand today, they're getting higher visibility into various production zones, which will produce coffee. Maybe the harvest time is around October, November time frame, but they have already gone into contracts, forward contracts, because they have higher visibility into the production zones. What is the estimated yield coming out of various zones? And because they are monitoring these zones, they are able to also take corrective actions on various production zones. So that's more from a market linkage point of view. They're getting they're getting better time for market linkages and hence a better price. Not only that, because it's completely traceable behind, they are also able to demand a better price from their buyers. Similarly, we have other impact stories, out of which I will talk about one of the DeFi projects that we are doing in Netherlands, and this was highlighted by even Parity or the Polkadot network as one of the first projects where it was a subscription, a leasing marketplace on BWS, where about the revenues have gone up by almost 6 times for the olive farmers in Greece and Spain. So this was a brand called Florisabor. Again, our customer is always a brand or a farmer collective or somebody like a trader who is an aggregator for FPOs or producers. So this brand was aggregating a lot of these smallholder farmers across Greece and Spain. Here, what we've given is you can tokenize, the trees have been tokenized. Actually, the farm assets have been tokenized. So you can adopt a tree or number of trees. Actually, its number of trees are adopted by Michelin star restaurants. Like 100 trees are adopted and they have taken a share of the harvest. So it's a access to finance, which is in the beginning of the harvest, and also an access to market, because they're pre-selling their produce at the end of the harvest. So this is one of the projects that we are doing in Netherlands. That's the brand is in Netherlands, but it is the beneficiaries are across Spain and Greece. Similar, the coffee supply chain and the honey is similar. Honey we are doing in India across 120 villages, across 2 FPOs, about 6,000 farmers, but right now only about 600 beekeepers have been onboarded into the model. Again, a similar kind of model, what I just explained so there is a brand which is having higher visibility into its beekeepers. And in that, they are actually giving the beekeepers almost twice the amount. They used to get about 80 rupees. Today, they're getting about 160 to 200 rupees per kg of unifloral honey. So the traceability is providing not only physical traceability, it is also giving sample test reports on the blockchain. So if you trace back, you get the trace reports, you get the entire traceability. You also get all the sustainability certifications that they might have. Now, from a blockchain standpoint, as I said, we are using our own chain, which is a parathread on Polkadot. So we're backed by the Web3 Foundation as well as the Polkadot Venture Network. It's a Lego-based approach, so somebody can also take one of the modules of the platform. So everything is coded into the chain. So we don't need to write millions of lines of code for every new customer that we onboard. And even going forward, it's a seamless upgrade. So had it been an Ethereum, every time you have an upgrade, you have to put down all your networks and then you have to release a new code because it's a hard upgrade. For us, it's a seamless upgrade, whether we go from various versions. So we've already gone to the 2nd version, we're going to the 3rd version. All our customers were seamlessly upgraded into those versions, and we can add more modules to the chain. So Ethereum and Hyperledger are general purpose blockchains. This is a it is a purpose-built chain for supply chains. So all these modules like identity, provenance, smart contracts for or tokenization for different documents are all coded inside the chain. So all you have to do as a customer is you call our APIs and you get that entire feature on your application. So we don't replace anybody's application. They can continue with their own applications if they don't take our application, but still have all the modules of the chain. So interoperability is one of our key differentiators. Asset transfer, like NFTs can be transferred from one wallet to another wallet. You can also transfer in the Borlough chain. You can also transfer audit reports. So if you want to transfer your audit report from the producer to the buyer, you can transfer any kind of assets can be transferred from one wallet to another wallet, not just currency. And finally, smart contracts. We do, I mean, it's very similar to Ethereum or any other chain, but not everything is a smart contract. And hence we reduce the cost of running the chain. It's drastically reduced because in Ethereum, everything is a smart contract. Here, only any trade or any settlement or any kind of document where there are two parties, a counterparty exists, that's when we have a smart contract.
Oyan, can you sort of go to the funding portion, please?
Yeah, so we are looking for a 2 million raise. Currently, we've till inception, we've crossed about 1 million of revenue already. Projected revenue this year is about 1 million. I mean, this is revised a little bit. We'll go till 850. We have a booked revenue of around 600K. And last year we did $307,000. With the 2 million funding, we're looking at utilizing that for sales and marketing, about 45%, 40% to product and support, primarily in the support organizations for the customers we are supporting, and the rest is in admin and miscellaneous. The valuation that we are looking at is a 8 million pre for 2 million.
Okay.
This is the seed round. This is how we projected. I can share the detailed projections with you. This is where we are right now. We have about 7 customers. As we speak, we have 8. Louis Vuitton is one of our customers in US, where we are doing supply chain efficiency. Florisabor is the olive customer. UNDP has actually listed us as in their global marketplace. So we are a registered supplier to UNDP. Masha Coffee is the coffee brand that we are tracing. Like I said, it's a Lego-based approach. So West Bengal government is using the first module, which is onboarding of suppliers, using that for onboarding 30,000 cooperatives onto the platform. So that's a tender we won, and we are currently implementing that. We are also a Government of India advisory for the NOS, the only startup to do so on the blockchain standards. Another thing is we are working across value chains. So we are value chain agnostic, but we have chosen certain high margin value chains which have a high export market. This is our team. I look into more the consulting and the business development, coming from a supply chain background. Vijay comes from Ethereum Foundation background, having actually developed one of the security tokens for Ethereum. Dave looks into operations. He comes from an insurance consulting background, and Ansem is one of our key members of the team. He's an ex-FMO right now, working for, again, an FMO organization, a sister concern. So he comes with a lot of sustainability assurance background. So he's the one who has been key in developing the assurance platform, which is the middle piece that I was talking about, Borlough Trails. We have advisors like Himendra Mathur, who is in the agriculture sector. We have Mr. Ramana as well as Mr. Mathur. This is our advisory board, and the last slide. We are actually looking to build a responsible sourcing standard for verifiable compliance and visibility across different value chains.
So there are a few questions from Ajay. How is blockchain helping in the UNDP example that you gave? Meaning, how is it helping in a better way than a typically digitization project? That's the first question. The second question is, which product line of Louis Vuitton are you implementing this for?
For Louis Vuitton, okay, that one is a quick one. Louis Vuitton, we are doing it for Sephora. That's the cosmetics brand. They're using it for suppliers onboarding, as well as benchmarking on the system, as well as efficiency. So the procurement of various brands to their assortments across 400 different stores.
In US, not
in US, yeah.
In US, okay.
US and Canada, actually. 400, now
do
it's
you,
actually
do
gone
you
up.
have an outcome oriented parameters for, let's say,
You mean to say the revenue model?
not the revenue model, like if you implement this blockchain based system
Mhm,
and you say it is to bring efficiency,
mhm.
then that means it must translate into some cost savings for them, right?
Yeah, yeah. I can give you an example of the jute one, because that's exactly what we did, and we actually showcased that for the Louis Vuitton project. So the jute mills were procuring jute from various brokers. So they didn't start with the farmers; they started with the brokers, and it was more practical. So they were paying detention losses. For one procurement to happen, they were using SAP, one of the largest jute mills, Hastings Jute Mill. They were taking about 24 to 36 hours to issue a material receipt at the jute mill. Like there were various steps, about 5 to 6 steps, which included inspection, going back to the broker, talking to them. Okay, should I raise a claim? Have you accepted the claim? All these interactions used to happen. Now, with a decentralized ledger and a place where you could, it's a single source of truth or a state of truth for all these stakeholders, they have reduced their procurement time to 10 to 12 hours. Thereby, they're not paying 10,000 rupees detention fees for every day they keep the truck at the mill. So for a truck worth of 3 to 4 lakhs, they're saving, every truck they're saving around 10,000 rupees per truck. Not only that, the management has a better visibility into in the procurement decisioning, because let's say the jute guys, they are serving to H&M. So H&M has given them an order. So to produce a certain quality of jute, they are procuring, let's say, TD4 quality of jute. Now, most of the time they're seeing there are certain brokers who are giving them the best quality jute when the thread, basically the yarn, is coming out of the production. So that can only be known after the production has happened. So based on that, they can take a better decision. Okay, broker number B is the one who is giving me 95% of the time my desired outcome. So because these traceability reports are available, they are taking better, it's a data-driven decision making. And another thing that is happening is, at the same time, the production manager, the inspection manager, and the broker is looking into the same quality of the jute. So if there is a claim raised, there is an immediate feedback from the trader. And there are also procurement frauds that happen. So the logistics company, what they do is they put in all these stones and everything inside the truck. However, the broker had not probably sent that. So they come to know which all logistics companies are usual offenders. So whenever we see that same truck number appearing, and we had seen such a issue happening, so there is an alert thrown. So here, what we have done is the actual on-ground procurement efficiency track and trace is interacting with SAP.
So, many of these things that you're talking about, I don't know the state of digitalization in this whole value chain. So actually, my question is, what blockchain does over and above a very standard digitalization, which will solve many of the issues that you're talking about?
Yeah, I'll talk about that. I was just coming to that question. So before I go into this slide, maybe. Yeah. So whenever you have multiple stakeholders, so a blockchain candidate use case is ideally when you have distrust between parties. You don't have the same transaction happening in a very trusted environment. There are multiple parties involved, and there is a handoff of various documents happening. That is when ideally you use a decentralized ledger, not a blockchain always. It could be a decentralized ledger. There is obviously digitalization can also happen for the same Nestle procurement of coffee by not implementing blockchain at all. So I should not say that only blockchain is the only solution, but there are certain practical problems of a centralized solution. For example, coffee is being sourced by Nestle. from maybe four tiers down the line from a producer in Uganda, which is Masha Coffee, where we are already working with. Now, Masha Coffee is not only giving to Olam, they don't directly give to Nestle, they would give to some trader. So they might give to Olam something, some to directly to Starbucks, some to somebody else. Now, each one of them have to extend their databases or their systems till that final producer, which is Masha Coffee. Now, that guy who's sitting at the supplier side has to enter information or comply to everybody's traceability information. And essentially entering the same data four times if they are serving to, let's say, 4 clients. That was the problem of centralization. And that's where we said, that is where everybody is going towards a decentralized architecture. Now, when you go towards a decentralized architecture, blockchain is not DLT, and blockchain is one of the use cases of DLT, or one of the DLT is not always blockchain. That is what I wanted to say. So a hyperledger is a DLT, but not a blockchain. Now, so hyperledger is more closed. It's a consortium where everybody trusts each other. Now, in this case, if you have a decentralized architecture, the next thing that you have to ensure is the integrity of those documents, or the integrity of the information that is flowing between systems. Now, when you bring in a blockchain-like system or a DLT, you usually sign information as an individual. So you bring in accountability. So you're digitally signing information as the quality control head of Nestle, that I have checked the quality of coffee. Now, Nestle's other departments may not be physically present there, but they know that if something goes wrong with that batch, I can trace back, or I can do a recall, and I know which department to hold responsible.
So this means much the same way as in digitalization. Also, there is a business process change. In blockchain also, there will be business process changes, and a lot of quality checks will happen at source so that you can trust the data, blah, blah, blah. Is that right?
It is absolutely, partially right. And I'll tell you, it is more than true, because many people are talking about IoT. Most of the supply chains, unless it's a very high value supply chain, IoTs would not be a feasible option. Like in honey, per box of honey, if you want to do a complete human-less track and trace, you can do that. That's what we allow also, because it's API driven. We can integrate to, like in jute, we have integrated to the moisture meter. So small integrations are okay, but when you go for complete digitalization and complete system to system interaction without a human intervention, the value of the product would, in many a times, would not allow you, because a bee box produces about 30 kgs of honey. And if you have to put an IoT on every bee box, it would cost you around 3,000 rupees. And 30 kg of honey would not, so 30 kg multiplied by about, let's say, 200 rupees. It will never, the economics will never allow you. So it's always better to do a maker-checker approach, what you just mentioned. But if you do the maker-checker approach, it's much more visible than a system which is not visible. If I do just digitalization, as I mentioned, you cannot extend, Nestle cannot extend its partner onboarding till the tier 4 or the tier 5, because it's humanly not possible. And if you keep on onboarding, so for the person who is serving to 4 different buyers, they will not enter data so many number of times. Rather, you integrate the data which is available on a source of truth, and you get that data and you integrate it with your existing ERPs without having to extend your systems.
So another question, and this is quite a stupid question because I don't understand this much. The cost of processing on blockchain versus the number of transactions and the value of transaction. How does that equation hold for you?
Yeah, I'm sorry. I forgot to switch on my camera. Just a second. Sorry. Yeah. I'll just share once more. I'm sorry for this. Yeah. So again, going back to the cost of transaction, and that's where we initially started with Ethereum because it was a natural thing, because that time Ethereum was popular. We're part of the Enterprise Ethereum Foundation. So we started with Ethereum, and then we saw the cost was prohibitive. What Matic is doing today is trying to solve the problem that you just mentioned, and we are also solving it in a slightly different way. So our biggest competitor would be Matic. However, Matic is in multiple industries. We are focused on supply chains. So what Matic is doing is they have developed a side chain where they have reduced the cost of transactions, and they are aggregating transactions and posting it once to the main Ethereum chain. In our case, we are a parachain. So there is a difference between Ethereum's side chain, which is governed by Ethereum, but Polkadot came up with a different concept, which is called parachains, where you could develop a specialized chain for a certain purpose. Hence, we call it a purpose built for supply chains. But you have a much faster consensus mechanism. So our speeds are much, much higher than an Ethereum. At the same time, I can also post in the public blockchain. That's where the blockchain comes in. And I can post it not only in our public chain, which is Borlough network chain, but also post on a public blockchain like Polkadot's relay chain or on an Ethereum chain. That's where the interoperability comes, and that's where the problem lies today. Most of the chains are not interoperable. And with a plethora of blockchains being implemented across the industry, you would come at a time where, like today, ERPs have to talk to each other. Tomorrow, blockchains have to talk to each other. And that's the core promise of Polkadot and substrate-based chains. And if you look at substrates here, we are actually a blockchain company ourselves. Most of the other, so India has probably just 2 companies right now having their own blockchain. One is Matic, one is us, because I have not seen anybody listed on as a chain, as an open source chain, having our own GitHub. So Borlough is actually listed on ecosystem projects for Substrate, which is Polkadot's ecosystem. So we have 2 economies, and that's what it brings me to. And I know that was your question. See, we can reduce the cost drastically because we control, our consensus is faster. And the cost of posting into a Ethereum is much, much higher than cost of posting it to a Borlough network and then posting it an aggregated transaction going into Ethereum or a Polkadot, which Matic is doing also the same thing. It's extending, it's bridging it to the main chain. So and that's our also as part of the white paper. I've shared you the white paper. So there we have actually built our own chain, and we are interoperable to. So the last page is where we have talked about interoperability, not only to the blockchains, but also through the API, we are interoperable to multiple systems. Hence, we have 2 economies. One we call, which is, so this is the light paper. We have 2 economies. One is the enabling economy, where we have not started monetizing. That is, we have not given our blockchain, we have not started monetizing our blockchain by giving the blockchain to other people to start developing applications on it. We are still doing it ourselves. We also have the enabled economy. So the enabled economy is where we take transaction fees. But if somebody is actually developing on top of our chain, that's where they get staking rewards and incentives. But in that way, we increase our nodes.
Ayun, thank you very much. I think it was very interesting. Ajay, there is a link. I will send you that link again, which has got all the documents and the presentation. So I think you will find it there. If there are no more questions, we will get back to you, Ayun, in terms of how we will take it forward into our main network. Anybody has any questions? Okay, Ayan, once again, thank you very much for joining us at short notice. Welcome.
Thank you, sir. Thank you. Thanks to all of you for your time.
Thank you, Ajay. Thank you, Rishabh.
All right.
Thank you.
Thank you.
So Ajay, what do you think? We should bring them to the main network, or
Yeah, I am trying to understand. This second one looks, I mean, this looks interesting. See, I've not been able to figure out, maybe we
the
need.
first one? Yeah.
No, in both, right? I mean, obviously, there are only so many questions we can ask, right? I mean,
Right.
the first one, I think this personally, the second one looks a little bit more interesting, but I don't understand the risk rewards here. Like to me, this looks like an interesting enterprise use cases for blockchain. But like the second one, we did not ask, tokenization and crypto and all that stuff because there's not enough time. So how is that working? How do companies benefit? But it looks a little bit more real use case of enterprise.
Right.
For the first time, I'm seeing something real.
Right.
The other one, frankly, I think it depends on the risk appetite of people. To me, that looks like a very risky venture because I didn't ask him. See, he's got $600 million worth of assets, that what he said. And the loan value is only $6 million. So it's only 1%. I don't know whether I heard it wrong or he said it wrong. I don't know. So who will bear the cost of these warehouses?
No, warehouse cost and all is borne by the farmer only. The farmer is keeping his produce in the warehouse at a charge. Only thing is, this is a way of easily giving them finance against their inventory, their produce.
Correct. Okay, got it. But still, 600
so
million.
the farmers already have a product with most of the banks, but it is very tough to implement it for the banks because banks don't have that mechanism to go to every warehouse and look at every produce and give a loan to the farmer and then collect the money also.
Correct.
Okay, I think we will take a call on all these things. We have got one more session, the last session, which is on 4th. There, 2 more startups are are presenting, which is from our Vasudevan Deutsche Bank MD. She's bringing 2 startups, one from Israel and one from India. And we will also have this Chingari founder talking on that day. So that
I think that would be very interesting.
Okay.
Yeah.
But we should I don't know, we should also hold what you were trying to do earlier, which is like either a round table or something where we can amongst ourselves.
Yeah. I think after this we should do a round table.
clear our doubts because I don't know how much we know actually.
So just hi Rishabh here. Just wanted to chime in a little. I actually missed the first one and just about heard half of the second one. So just wanted to understand, are these guys based out of Delhi or Bangalore? Where are they based out of? If we can have.
I see this second company is based out of Kolkata. I know that because I met them at Hyderabad and then only connected with them. The first company, they are again distributed. I think this Anand guy, he's in Pune. Abhishek sits in Calcutta. He's a technical guy. And then I think the teams are all distributed.
Okay. So I will go through the recording, probably if there's a recording for this session.
Yeah. Recording I'll post, probably tomorrow morning I'll post the recording.
Done.
No, we will bring them to the main, our main deal flow session, or we will talk to our group and see, if we want to do a proper deal flow session.
I think makes sense. We should
do that. The only challenge, Hari, is that this is a very complex subject. I think it's very, at least I personally find it very difficult to understand, What is the
business? In crypto blockchain world, everything is not crystal clear on day one, and that's indeed the opportunity also. So
no, that I understand. I understand that, Rishabh, but at least so there are many businesses where we are investing, where things are not clear, somewhere revenue is not clear, somewhere business model is not clear. I think all that is understandable. Here, these guys talk a language which itself is not clear. You know, you know, they throw acronyms and terms, and they are talking, English, which is like over the top.
Just imagine, Ajay, you are a technical guy, right?
Yeah, I am not technical, but in the process, Hari, you would not believe, I have started doing a course on understanding what is this blockchain.
So see, there is a lot of merit in this. So in fact, I'm currently traveling. I'm in Singapore, but I wanted to bring in few deals to share here. In the US, I've got some couple of companies I've been involved with in the crypto space, and they're doing some very interesting work on tokenization, on having physical assets being backed by tokens and currencies. And we've got fairly good traction coming in from the first pre-sale itself, and now going in for the second pre-sale. I think it may be interesting to bring it to the table where maybe those guys can present. And
Can they come on 4th, during IST, in the sense around 7 o'clock the same time, 4th of July, because we are having 2 more companies presenting on that day.
Okay, I will speak to them today itself,
Okay.
and then I'll confirm it to you.
Okay.
Done. So they've managed to get on really good set of advisors. I'm one of the advisors on the board. They've got like 30 more with crazy backgrounds. Yeah, I mean, right from the VC world to head of banks, etc., globally. And I think they've got something good going in a very short period of time.
So
And
the first company that presented today is almost a similar company. They do warehouse receipt financing for Indian farmers. Now they are taking it global.
Okay. So in fact, in India, most of the guys who are doing are actually linking this to the agri fintech kind of business models, because I think that's where they've really found some niche and scale, and they're able to regulatory work through without much problem.
Right.
But most of the other ones, I think regulatory issues are still quite grey here in India. That's why they're all based out of either Dubai or the US or Europe.
See, most of the crypto companies are based out of, some very pure domiciles, right? So,
Correct.
So Dubai has become one of them. Switzerland is one of them. Then there are many of these Caribbean islands. They're all based out of that.
Correct.
Okay. So thank you very much. So
Yeah.
let's connect again and see what's happening on 4th. Thanks, Ajay.
Thank you.
All right.
Thanks.
Thank you, Hari. Thank you
Thanks,
so
Vishal.
much
Bye.
for organizing all this. Thank you.